Hey traders, welcome back to the weekly Forex Forecast. Going into next week, the dollar is likely to be fairly range bound throughout the week. Why? Because we've got non-farm payrolls on the Friday. And non-farm payrolls is now the big one because it was inflation. Inflation has made its way back towards target, not quite there yet. So the jobs data, the jobs side of the dual mandate of the Federal Reserve has become the main focus for markets. So I do think we're likely to see this massive rally, which is signifying a bigger trend reversal in the dollar to the upside because momentum precedes price. Markets don't move in a straight line forever, so it does need to pause and correct. And on balance, I think that's probably going to take place next week, maybe leading up to non-farm payrolls. So I expect the dollar to kind of chop around, not do too much. If we get dollar weakness, which is what I really want to see, and we start to trade below the 103.33 in the dollar index, this is where we become oversold intra-week, and we may trade down there and get an opportunity. Non-farm payrolls tends to move in one direction, then fly in the other direction. The first move tends to be the wrong move. And it's a setup I've traded many times with members in the GMT area. And it is something I'll be looking at next week. Are we going to get the dollar pushing into the lower bound, into non-farm payrolls, and then we get that reversal? Either way, I have an overall bullish bias on the dollar. So any weakness in the dollar next week is going to be viewed as an opportunity to look for long opportunities in the US dollar. That would be something like short euro dollar, short New Zealand dollar is one I really like, and we're going to look at in today's video as well for next week. Okay, so if we jump over to the portfolio selection part, probably the most important part of my trading plan for the week, and the number one asset that I like next week is the New Zealand dollar. So the theme being New Zealand dollar shorts. This was a market highlighted last week, or an asset highlighted last week, the New Zealand dollar, for potential underperformance. That's what the hedge dash algorithms have been saying. And last week, the New Zealand dollar did underperform, and I'm looking for that again this week. So once again, I'm interested in New Zealand Swiss franc to the downside, New Zealand dollar to the downside. We're also going to be looking at pound New Zealand to the upside. Those are my three favorite markets heading into next week. We're also going to look at the Japanese yen to the downside. So we're going to look at franc yen to the upside, US dollar yen to the upside, pound yen to the upside. Why? Because the US dollar is one of the top long themes heading into next week. And at the moment, what we're seeing at least is because of that massive yen carry trade, as money goes into the US dollar now, it's coming out of the Japanese yen. I mean, it's coming out of all currencies, but it's coming out of the Japanese yen substantially. So we're seeing that trade-off. And the other thing is, alongside the New Zealand dollar with a red performance wheel and a red arrow, it is the other asset which is, yes, neutral, but look at the momentum. The momentum is to the downside. So it's telling us this in the near future is likely to be making its way into the negative side of the performance metrics. So for those two reasons, the algorithm here, and also the fact I like US dollar longs, which is essentially the opposite of the Japanese yen at the moment, I do favor those yen shorts. I am also interested in one other currency to the downside next week. Now, we could look at the CAD, we could look at the euro, or we could look at the Aussie. And the third and final market I'm going to be interested in to the downside next week is the Canadian dollar. We did get the 50 basis point cut out of Canada last week, so I'm looking for that to feed into the weakness in the Canadian dollar. We have had an Israeli retaliation on Iran. It's hard to know whether this is going to have a big impact on crude oil on Monday or not, because the targets in Iran were not the oil infrastructure as far as I'm aware. And if you remember, when Israel stated previously that they weren't going to attack Iranian oil infrastructure, oil actually sold off. So it's not guaranteed that the Israeli retaliation on Tehran is going to massively increase the oil price. It may gap up a bit, but I do think Canadian dollar shorts next week are something I'm going to be interested in as well. So alongside the New Zealand and the Japanese yen, I'm going to be looking at CAD short as a theme. And again, I'm going to be looking at that versus the Swiss franc. So we'll be looking at CAD franc to the downside. We're looking at US dollar CAD to the upside. And we'll also be looking at pound CAD to the upside as well. Okay, so kicking off the watch list with crude oil, as we do every single week. Now, I am bearish on crude oil overall. What that means is, it doesn't mean that crude oil can't go up and push into its upper bound next week. It means that any upside in oil next week, I'm only going to be looking for short opportunities to fade it. So I can only be short crude oil next week. I cannot buy it. We've just discussed the attack on Iran and how it wasn't on the oil infrastructure. We may get a gap up, we may see some strength in crude oil, but I don't think this is anything that is necessarily going to reverse the trend. It's a little bit difficult to say because you don't know how it's going to respond, but I would imagine that any push to the upside is still going to resolve itself overall to the downside for the time being in crude oil. So you can see we've already started to break above the moving average, and all that simply means is we're starting the week with a bit of strength. I'd like to see this push through, especially if we do get a gap up or we get a little bit of strength on the Monday on the open because of the retaliation from Israel. Any breach of the 75.64 next week, especially if we take out this high, this is going to be an area where we become overbought intra-week above the 75.64. In an asset, I'm only looking for shorts. So if we breach this, I'm going to be looking next week at a potential short opportunity for 1 or 2 days to the downside in crude oil. Again, out of 5 trading days, I'm trying to capture 1 or 2. That's the goal each week. And very often you trade into these upper bounds, you will get, or the lower bounds, you'll get 1 or 2 days worth of reversal from these levels. Very often, not always, of course, but very often. So any breach of this, I will be looking for a potential short. If we blast through here for whatever reason, usually you need some kind of unexpected or expected catalyst to take out the second upper bound. But if we breach this and we trade above the 79.59, this is the second place, whether I'm already short from here or not. If I'm already short here and it pushes to here, obviously I'm risk managing a losing position. And usually I do that by adding over here, and as it reverses, I usually exit this for break even. That's something I do all the time with GMT members in the week. Now, if that happens and we trade above the 79.59, what does that mean? Why would I add a second position? Because we become extremely overbought intra-week, and the market pricing probabilities above the 79.59 are about a 9 out of 10 chance of pausing and reversing and closing the week back inside this range. So, or back below this level in this case. So that's why I would add, because the odds of a reversal increase above the 79.59. So those are the two things I'll be looking at. You can also look at intra-week. We start to push up towards the upper bound, and instead of testing the upper bound in crude oil, we break back down below the moving average, very much like this. You're pushing up and you break down below the moving average and then look for it to tuck in and push away. That's the third thing you can look for next week, and that would be a bear flag setup in this case down to the profit target of the 67.73. Below there you become oversold intra-week, so it's a great profit taking opportunity for any intra-week shorts in crude oil. This is a better example over here. We break down, tuck into it, move away. Even here we sell off, and look at how that nicely tucks into the moving average for the next momentum leg down. Kicking off the watch list then with my top theme next week, which is New Zealand dollar short setups. And we're starting with New Zealand franc. So New Zealand franc, what I'd like to see out of this market next week is I'd like to see this pull back, breach the moving average, and if we can take out the 0.5255 and these prior highs, and there's at least 3 of them over here, so we've got a really nice key area of resistance if you allocate all of these, into the same space here. And any breach of this means we become overbought intra-week in a market that I want to be short, and we start trading into significant highs. This is going to be a great setup. I'm going to be looking at trading next week for 1 or 2 days down. If for whatever reason it's unexpected, it's kind of a plan B. But if for whatever reason I get short somewhere above this level and it blasts all the way through above the 0.5330, this is the second place I would be looking to either add and cost average the initial losing position, or add an initial position. If I'm not already short, this is a fantastic opportunity to look for 1 or 2 days down from above this level. And the third thing, of course, you can look for is we're already starting to break out. You can see we've actually broken out of this kind of bear flag or this kind of channel. If we start to pull back and we take out the moving average, or we just trade into it and we kind of hug it, you can look for that break back down and then look for that kind of bear flag setup into the moving average and sell off down to, in this case, good profit taking target next week at 0.5104. But I can only be short New Zealand franc next week. I cannot buy it. Next is New Zealand dollar. Again, I can either be short or do nothing. I would like to see this break higher. And as always, I'd like to see this ideally become overbought intra-week. When will it do that? When it trades above the 0.6062, if it trades above there. And if it does, reactively, I'm going to drop down, usually 1 hour, 15 minute, 5 minute, and I'm going to start to look above this level next week reactively for momentum to fade, look for those reversal patterns, and then look for that 1 or 2 days to the downside in this market. If we blast through here, the second level to the upside where we become extremely overbought intra-week is the 0.6146. If we breach this, whether I'm already short or not, this will be the second place. I'll be looking for a 1 or 2 day reversal to the downside next week. And the third thing, of course, you can look for it to break back above the moving average, make its way up. And if it doesn't, if you get a fast market, in other words, it's weak enough that it can't take out its upper bound or turn overbought intra-week, you get that break back down below the moving average turns with it, and then you can look for that bear flag set up to the downside into, in this case, profit taking target at the 0.5892. And the third New Zealand pair I like next week is Pound New Zealand. Now this has a really nice technical breakout. You can see we attempted to break this high and we sold back off. And we've just been consolidating and ranging, and now look at it breaking out with momentum. Look at how the moving average kind of goes sideways, and now it's starting to do this again. So this is a nice trend to the upside. Ideally, although I don't know if it will actually do this, but ideally next week I'd like to see it trade below the 2.1464. If it does that, we become oversold intra-week in a market that I want to be long. That's where I'm going to be looking for a 1 or 2 day reversal to the upside. If unexpectedly, for whatever reason, we get some kind of catalyst and we take out not just the first lower bound, but also the second one, whether I'm long from here or not, below the 2.1244, I would be looking for a second opportunity for a 1 or 2 day reversal to the upside. And the third thing you can look for, especially as we're getting this kind of technical breakout now, I would not be surprised to see this kind of attempt to take out the lower bound and fail to do so. You know, just get this kind of bull flag set up where you break back through with momentum, and then you can look for it to hug the moving average, turn away into the profit taking target here at the 2.1905. Moving on to the dollar pairs then, and starting with euro dollar. Now, I'm not ideally looking to short the euro next week. I do think there are better currencies to short, namely the New Zealand dollar, the yen, and even the Canadian dollar. But on balance, you know, if we have a strong bias on the dollar over the next few weeks, and I'm only looking for long positions next week, euro dollar to the downside is something I'd be interested in. So I'm only going to be looking at shorts in euro dollar next week. I would like to see this market pulling back, and I think there's a good chance because all of this is one move. All of this, you can see how we've kind of resided below the moving average. This is all one leg or one wave or one, however you want to call it. Now, this market needs to pause and correct, so I would not be surprised to see this happen next week before non-farm payrolls. If we start to push higher and we take out the 1.0921, especially if this happens sort of Monday or Tuesday, because then we got, you know, a number of days before non-farm payrolls, we could see this reverse. Above here is where I'm going to start to look next week for a 1 or 2 day reversal to the downside before non-farm payrolls. If we get close to it on non-farm payrolls and we break higher, I might look still for a short on Friday after non-farm payrolls. Again, it's a specific non-farm payrolls trade. Tends to be the first move is the wrong move, but I still only am going to be looking for long positions. I'm not going to short the dollar regardless of non-farm payrolls next week. If for whatever reason we make our way up to the 1.1046, and this is unlikely to happen until non-farm payrolls, non-farm payrolls as a catalyst could potentially push this up to here, but I think it's very unlikely. But as a plan B, just for caution, it's good to have this level on here. This would be where I'd be looking to cost average and risk manage an initial losing position. Or if I'm not already short, this would be a great initial position above the 1.1046. We become extremely overbought intra-week. And the third and final thing you can look for, of course, if it starts to break up above its moving average, and then instead of taking out the upper bound, you get the sell-off. You get the momentum leg down, the moving average turns, and you can start to look for that kind of bear flag setup into the lower bound, in this case, profit taking target to the downside for next week at the 1.0670. And the final US dollar pair we're going to look at here is US dollar CAD. Now, US dollar CAD is also trending nicely to the upside. I'd like to see this shake out a bit, and I'd like to see a deeper correction. Taking out the 1.3772, we become oversold intra-week, so during the week. Once we trade below that level, especially if we take out this low, that's going to be a great place to start to look for a 1 or 2 day reversal next week. For whatever reason, you can see there's a prior high over here. We broke above it. We could come back and stair step it, but I'd be very surprised. We'd have to have some major unexpected catalyst or some massive unexpected release from non-farm payrolls. But I don't think it's going to happen. But if it did, reactively, this would be the second place. We would turn oversold intraweek below the 1.3772 and extremely oversold intraweek below the 1.3653. So it's the second place. I'll be looking for a 1 or 2 day reversal. And of course, just like the other markets, you can also look for that third intraweek opportunity where we start to trade down towards this level. And instead we break back above in the direction that we're planning and looking for. The moving average turns up and you can look for a potential bull flag setup into the moving average and away into the 1.4011. Great intraweek profit taking target to the upside next week in US dollar CAD. Continue with the CAD pairs then. Following on from US dollar CAD, I do like CAD franc to the downside only. Again, we got the 50 basis point cut out of the Bank of Canada last week. Looking for some follow through weakness this week. We didn't get much of a reaction actually last week, but I am only going to be short of doing nothing in this market. What I'd like to see is volatility has dried up. That's why these levels look huge. They're not. It's an illusion. This is just very, very tight price action. But what I'd like to see is I'd like to see the market pulling back, breaching the 0.6304. And especially if we could break through here and take out this high, although it's a bit of a stretch, almost halfway towards the second upper bound. Any breach of the 0.6304, we become overbought intra-week. I'm going to drop down and look for those reversal patterns for a 1 or 2 day reversal. The next thing I'm going to look for then is if we blast through here, as unexpected as it is, but if we do breach the 0.6370, we become extremely overbought intra-week. This would be the second place, whether I'm already short or not, that I'll be looking for a 1 or 2 day reversal. And the final thing you can look for is, again, a break, chop around, pushes towards its upper bound, fails to take it out, and instead we start to see a break back down below with momentum. Then you can look for the moving average to follow it, and you can look for that kind of bear flag setup in this case, down to a great profit taking target to the downside at the 0.6172. And the final CAD pair before finishing off the Forex universe with the yen pairs and then moving on to gold and silver is pound CAD. Now, pound CAD is a market I can either be long or do nothing. Cannot sell this market next week. It's chopping around. You can see the moving average is kind of flat. I'd like to see it break back down below, continue to range, take out this low, and also trade below the 1.7849. We become oversold intra-week. I'm going to be looking for a 1 or 2 day reversal to the upside below there. If for whatever reason, unexpected as it is, we blast through, take out the 1.7692, we become extremely oversold intra-week in a market I'm only looking to be long. Going to be dropping down, looking for those reversal patterns, whether I'm already long or not, from below that level for a 1 or 2 day reversal. And the third thing, we start to break down below the moving average. And again, instead of testing the lower bound, we break back above the moving average, and then you get your kind of, in this case, would be this kind of consolidation, bit of a pennant breakout almost. You kind of break out, bull flag into the moving average, and then you can look for that rally into not just the prior high, but also the 1.81629. Okay, so wrapping up the Forex universe before moving on to gold and silver with a couple of the yen pairs. Now, very quickly, we do also have the BOJ on Thursday next week. So the goal with the yen pairs is to be in and out of them before the BOJ, because we saw last time quite a bit of volatility on the BOJ. So if we're fading moves especially, we probably are going to have the risk of having those pushing to their second upper and lower bounds, and I mean the yen pairs, after Thursday. I'm not saying that's going to happen, but with an interest rate decision on Thursday, you could very easily see the yen pairs going to their second upper and lower bounds because of that catalyst. So coming into next week, regardless of what happens with the BOJ, and ideally, again, I'd like to be in and out before Thursday, but I can only be a seller of the yen next week. So what I'd like to see is I'd like to see this market coming down, breaching the 173.44. If it does that, especially if it pushes all the way down, takes out these lows, it means that this market is now oversold intra-week. And especially if this happens early on, Monday or Tuesday, there's a very good chance that it ranges back before the BOJ, because money is unlikely to come in substantially before Thursday. If it does this early in the week, I'm going to be looking for a 1 or 2 day reversal to the upside. If for whatever reason it blasts through here and takes out the second lower bound, and that's most likely going to happen after BOJ, if it does at all, it would be after. Very unlikely it's going to do that before the BOJ, because, you know, usually the opposite happens. You have a lack of volatility before these interest rate decisions. So I would be looking for a potential long opportunity below the 171.17. When could that happen? Let's say the BOJ comes out and we get a very bullish response. Let's say they unexpectedly hike rates by 25 basis points. Don't think that's going to happen, but let's say they did. You could see this pushing all the way down to the second lower bound. Maybe in that scenario, you sidestep buying the first lower bound, right? Because you've got a catalyst now. Oh, unexpected, hawkish 25 basis point rise. I'm not going to step in front of this train as it sells off, ends up pushing down to its second lower bound. Then you could probably step in and fade the interest rate decision, because even with interest rate decisions, not often do you get these markets trading much above their second upper and lower bounds, even with a catalyst. So that is an opportunity below there. And the third thing you can look for also throughout the week is you start to A, B, C, and then you get the break back above, and this becomes a kind of trend line breakout as well. The moving average turns up. You can look for that bull flag into the upper bound at the 177.98 pre-BOJ on Thursday. And wrapping up the Forex universe then with pound yen, exactly the same. I'd like to see this come down, take out the lower bound before Thursday, take out these lows. That would be a great opportunity to look for a 1 or 2 day reversal to the upside before Thursday's BOJ meeting. If we blast through there, possibly after BOJ, and we take out the second lower bound at the 190.94, we become extremely oversold intra-week. And again, this is where I'd be looking for a 1 or 2 day reversal. Whether I was long already or not, that's going to be a great opportunity to the upside. And the third thing you can look for is, just like with all the other yen pairs, you can look for that bull flag setup where it breaks down and then it breaks out. And again, it probably looks something like this for those of you who like your trend lines, but it doesn't matter because the moving average follows and then it tends to consolidate into it. And that's where you get your bull flag set up into the 200.67. Great profit taking opportunity to the upside next week in pound yen. Okay, so wrapping up the video with gold and silver as always. Now, normally when I have a bullish bias on the dollar index, this gives us, or ends up giving us, a bearish bias on gold and silver. However, there are periods where the dollar can go up and gold and silver can also go up at the same time. And we are in one of those periods. I do think a stronger dollar is going to break the rally in gold and silver at some point. That point is not yet as it currently stands. So I still want to be looking for long positions only next week in gold and silver. So any pullback in gold next week, if we can trade back down below the 2696.83, especially if we can trade below it and trade into this high, then we've got a breakout of this kind of consolidation. We break out, this kind of channel here. And at the same time, we pull back, we retest the high, and we're oversold intra-week. That would be a great place to look for a 1 or 2 day reversal to the upside in gold next week. If for whatever reason, very unexpected, I don't expect it at all, but if we did blast through there and take out the 2646.04, whether I was long or not, this would be the second place I'd be looking for a 1 or 2 day reversal to the upside. And the third and final thing is you start to trade back down below the moving average. Again, maybe this is an A, B, and a C. We get close to it, and then it breaks back up, and now you've got a consolidation breakout. You can look for that bull flag into the upper bound next week in gold at the 2798.42. And last but not least, we have silver. Now also, I can either be long or do nothing next week. And when are those periods when you see gold, silver, and the dollar going up together? It's when you get these kind of inflationary regimes. The markets are clearly concerned about a re-acceleration of inflation. We're seeing the dollar go up, yields go up, and we're also seeing, gold and silver going up. So in next week's trading, I'm going to be looking at a potential long opportunity, especially if we trade below the 32.05. That's the level. If we breach this, we become oversold intra-week in silver. I'll be looking for a 1 or 2 day reversal back inside this range. If we blast through there and end up taking out the 30.39, and I would imagine this low as well in the process, this would be the second place. Whether I'm long from here and just risk managing, or if this is just an initial position, it's the second place I'd be looking for a 1 or 2 day reversal. And the third and final thing, we're already below the moving average. You can look for the consolidation breakout, moving average to turn up, and you can look for that bull flag setup. Hugs the moving average and then takes off into the profit taking target intra-week, just for next week in silver, is a 35.37. Very much like this, breaks into it, hugs it, drives away, hugs it, drives away. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.